All right, folks, and welcome to our Alumni Chat Series. Here today we have Drake, who is actually one of our Analyst Prep Program alumni. He's also an instructor and mentor within our analyst community at Romero Mentoring, and he's also a full-time investment banking analyst at Bryant Park Capital. And he's been kind enough to share his experience and share his story as well to give you more insight into his own professional development, especially for students in our community. So with that, Drake, how are you?
I'm good. I'm good. How are you?
Good, good. I actually quite busy with the operations of Romero Mentoring as we're trying to grow and scale up and serve more students. So I have here a couple of questions, that we've prepared for you so that we can put a little bit more color into your story and hopefully serve as a roadmap or maybe a case study for many students in our community to follow and also for our YouTube audience. So why don't we first start by you telling us a little bit more about your professional experience and your background?
Yeah, so I graduated from St. Bonaventure University back in May 2022. I had a major in finance and two minors in accounting and economics. And really kind of where my whole professional experience started was our Students in Money Management Club. And so that was an equity fund on campus, student run. We were working with about 500,000 assets under management. And I had joined that club when I was a freshman. And that's when I really started getting a taste of like the financial world and the securities markets. And I was working my way through the club. Started off as just a lowly analyst, and I ended up making it to senior analyst of the healthcare department. And I started getting pretty good at building out my pitch decks, but I knew I was lacking in a lot of technical skills,
Mm.
and I didn't really understand the whole industry too well. Like, what were the different sectors? What was the big difference between the sell side and the buy side? What kind of jobs were actually out there? And going into my senior year, I was elected to general manager of the fund, and I knew I would have to be giving lectures during club hours. And I, was thinking to myself, like, man, I could barely do a DCF myself. How am I supposed to teach kids this? Like, I can't do that. And COVID had hit my sophomore year. I didn't have any relevant internships. So, it was all starting to crash on me a little bit like, holy cow, I graduate in a year. I got this new position and I don't really know what I'm doing. And that's when I was like fumbling around trying to find something to fill this gap. And that's when I found Ramiro Mentoring. And I think I actually found Ramiro Mentoring just through like a Google search. And I remember applying to the program. Initially, I had just applied for the junior program that didn't really go into the M&A and the LBO side of things. And I remember getting the email from you on the modeling test. And I was sitting there and I was like, holy cow, like this is the first round interview. I'd like this has got to be a serious program. They really, they know what they're talking about. And then I remember talking to Nick. He was like my phone call interview. And like at the time he was a sophomore and I was a junior. And this kid was talking circles around me. And I gotta say it was probably one of the most humbling experiences I've ever had. Talking to a kid who was younger than me, but very aware of the market, very just understood the industry very well, super well spoken as well. So that was like kind of the moment where I was like, okay, like look at what it did for this kid. In just a 10-minute phone call, I could see like he's, leagues above his competition. And so that's what really got me interested in it. That's what really filled this gap and set me down the path of, yeah, like I think I do want to do investment banking. I think I do maybe want to experiment with the buy side, private equity, growth equity. And so that's what really set me down the path was Ramiro Mentoring and that sim club that forced me to look into Ramiro Mentoring.
Okay, interesting. So you mentioned a couple of interesting points there. The first one is lacking technical skills, right? So you started to question or I guess take initiative or matters into your own hands in terms of figuring out programs available out there to help you develop these technical skills. And then you found us. And then number two, you got to experience our interview process, which is, we give you a financial modeling test to assess your technical skills just to see if you can follow instructions and if you can actually build the model. And then you also got the opportunity to speak to Nikita, who's actually going to work at Piper Sandler in their M&A team. So he's someone that has definitely done, a tremendous amount of work to get to where he's at. And then you speaking with him, you kind of got to see someone that's much junior than you, a sophomore while you were a junior, and the level of technical skills that he had were, that definitely pretty advanced after completing our program. So that definitely puts a little bit of context in terms of your own professional development. Now, I know you're at Bryant Park Capital. Can you tell us a little bit more about why you decided to work at Bryant Park Capital, number one, and number two, what was the recruiting experience like for you before you went to Bryant Park Capital? Now, here's a short break. If you're enjoying our content, don't forget to visit our website, romeromentoring.com, and check out our starter analyst programs, where you'll learn financial modeling, investment analysis, valuation, and develop the skills professional analysts apply on the job each day. In addition to that, you'll have access to our platform and exclusive access to content relating to investing, stock analysis, opinion, and much more. Join our growing analyst community and level up your skills today. Now back to our content.
Yeah, so the decision for Bryant Park Capital was actually kind of a difficult decision for me. And I'm sure you remember we actually hopped on a phone call because I felt very torn. I had two offers at the time, one for a corporate development position in the M&A workings of a healthcare company. And, like I said in SIM, I was senior analyst of the healthcare department. I felt like I had a strong connection to the industry and I enjoyed it. I thought it was cool. There's a lot of innovation in that space. So it's kind of like almost like an arm of the tech space in the way that I view it. So I was like, man, this is a really cool opportunity. I like M&A work a lot. And then I had this Bryant Park offer. And, at this point in my recruiting process, I had gotten denied by so many investment banks. It was just one rejection after the other. I think in total it was 52 rejections, and I got like 4 or 5 interviews, and 2 of them led to offers, and the rest were rejections down the road. And so I was sitting there, debating like, okay, well, I have this investment banking opportunity, and it's not as focused on M&A. And then I have this corporate dev position that is really focused on M&A. And so I had to kind of build a pros and cons sheet of like, what were the pros of Bryant Park? What were the pros of this M&A position? And really there was 3 main reasons that I ended up going with Bryant Park. The first thing was the fact that they were in office. I personally, I don't mind remote work. However, I feel like, as a junior analyst just coming into the industry, it's important to be there in the office and see your supervisors, your associates, and, you learn a lot more on the job, I feel like. Maybe down the road, you have a couple of years of experience under your wings. The remote position might work better for you. But for me, I felt like, I needed to be in there. I needed to be in the storm to really get the most out of it. So that was one of the big things. The other big thing about Bryant Park was they reminded me of Romero Mentoring, the way that they tested me right out the gate in the interview process. They hit me with a 3-statement model, a DCF, comparable company analysis, really just hammering my technical and even my writing skills before they would even have me interview with an associate. And even that M&A position and even the private equity positions that I got interviews for, none of them tested me like that to actually see like this is, someone who can keep up, knows what they're doing, has, received some level of training, and is going to provide value to us first day on the job, not just be a liability for first 6 months. So those two, that really stood out to me. So those are the first 2 points. And then the third one was the investment banking opportunity. Like, to turn it down, it just wasn't the right move. The corporate development, it might have been more focused on M&A. And yes, maybe I enjoy M&A, but that's not a good reason to turn something down. There's other opportunities in investment banking, getting to see the capital raising process, both sides of the M&A, the sell side and the buy side. Instead of just being on the buy side M&A, I get to view all of that. And the other cool part about Bryant Park is they have a private equity fund as well. And so every once in a while, if they, have a little too much work on that end, I'll get to do a little bit of ad hoc stuff for the private equity arm. And so with Bryant Park, I get this kind of umbrella of experience instead of just getting that M&A experience I would have gotten in the corporate dev position. So those 3 points, those are really the big reasons that I ended up picking that offer.
And that's interesting because the first one, just to recap, the on-site experience as opposed to remote. I think that's something for a lot of undergraduate students and seniors that are going to break into the industry to really understand that. I think starting your career where you're working on-site at the office in a professional setting is very important to their own developmental process of becoming a professional as opposed to doing it remotely. So definitely the on-site exposure, I understand that as a benefit. Then the second one that you mentioned was a rigorous interview process where they gave you a financial modeling exercise or an entire case study to do just to test your technical skills. So that kind of gave you an opportunity to showcase what you can do, and also perhaps kind of a preview of the type of work you're going to be able to do there. And then on the third one, you've mentioned that it was an investment banking opportunity versus the other roles that you receive offers for. Okay, so that's quite interesting. How's your experience been so far at Bryant Park? I mean, I know now you're an investment banking analyst. Tell us a little bit more about your day-to-day and expectations there.
I'll say it's definitely an experience. Every day you walk in and you learn something completely new. There's not been a day that I went home and I didn't take something new away from the experience. And you also get used to a lot of other things that, a lot of people might not prepare you for. Being lower man on the totem pole, you got to do a lot of comment turning. And sometimes, that could seem very tedious for someone just coming out of school. Like, man, why am I wasting my time with this comment turning? And like the formatting is something they're always going to be hammering you on. And I know this is, we hammer this at Romero Mentoring really hard, but it's just the truth. Whether you're bulge bracket, boutique, or lower middle market like Bryant Park, I mean, client ready work is the end goal every time. And so you're going to deal with a lot of comment turning, a lot of formatting issues that you just have to deal with. One great thing about Bryant Park that's been actually really fun for me is because we run so thin, I'm actually the only analyst at the at the firm, and then we have a senior analyst and then our associate. And so we have a couple of interns underneath us. And because we run so thin, it almost feels like I'm not necessarily bottom man of the totem pole, and I get to almost act like an associate, and the interns are like my little analysts. So I can kind of send them off on little, tedious work a little more often, and it definitely takes a little more pressure off of me. And then one other thing I think I really should hit on with investment banking, and I'm sure you can add in with this with your experience at bulge brackets, is it's a very up and down schedule, very volatile schedule. Like the first 2 weeks I was there was really not too much going on. It felt like I was getting out of work almost early, and I was like, oh man, like this is crazy. Like this is nothing like the horror stories I had heard. And then out of nowhere, a bunch of publications are due. We just got like 3 engagement letters signed, and it's like, okay, I'm in the office till 9 p.m. every night. Like, so it's a super volatile work schedule. But I feel like that's part of the thing that makes it so fun. You go to the office in the morning and you never really know when you're gonna leave.
Yeah, no, look, I can definitely relate to that because in my early days, over a decade ago, when I first started out as an M&A analyst at Credit Suisse, I remember the first week or two were quite easy. And what I mean by that was you will be staffed with a second-year analyst, and you will shadow the second-year analyst, and then you will be part of that project. And you will be giving, 1 or 2 slides to do just so that you can understand more of the process, the standards, and how they do their work. But coming into the third and fourth week, that's when you get staff on your own individual project with the entire team, MD, director, VP, and associate, and then all of the work. It's really up to you to do, right? And then from there, as you develop more experience, as you get more of a hands-on approach on how to navigate, the systems that are in place within that firm, then you get staff on your third project, fourth project. And in some cases, you have 5 projects going on at once. And that's when you are staying pretty late at the office, you're 4 or 5 in the morning, and then you have to come in early at 8 a.m. because you have a call with a client that you have to be there. So there is a cyclicality cycle to the business where some months you're going to be busier than others, and it all really depends on the client. If the client wants to buy another company, okay, we got an engagement. We have to update the model. We have to do the M&A analysis and all this other stuff. So I understand exactly what you're referring to. But look, I believe for many junior professionals in their careers, especially coming straight out of undergrad, it's perhaps the best place for you to develop a lot of experience in a very short period of time. And it's also one of the only places where you're going to be getting a lot of responsibilities where you're responsible for $1 billion type of transactions. I mean, if you're 22, 23 years old and you're responsible for working on a $10 billion M&A engagement, how many people in Wall Street do you know that are working on a $10 billion transaction? So it's a lot of responsibilities that is bestowed upon you. And that's where the learning really takes place when you're doing those type of analysis. So I totally understand what you're saying. And I'll add one point to the tedious, I guess the tedious and mundane type of work that you're referring to. It might seem annoying at the beginning, but the more you do it, the more you realize. And the higher you move up into your senior level roles within your professional career, the little details matter. Those things definitely matter a lot because the intended user or the intended person that's going to view this presentation is the client. That could be the CEO. That could be the CFO. It could be a multi-billion-dollar fund. And these individuals that are seeing these presentations, many of them come from investment banking. Many of them understand what it's like to be an analyst, an associate, and they did that type of work. So if you present to them a $1 billion idea and you can get the right color or the right logo or the right formatting on an investment model or what the return will be, they're going to start judging. They're going to start saying, wait, if you can't get this correct, what makes you think I'm going to listen to your advice, right? You want to advise me on a $10 billion transaction, but you can't even get my logo right. Right? It already opens the door opportunity, or it opens the window for criticism, and you lose a lot of credibility. So this is why the little detail matter in the professional world of finance. So I hope that message becomes a lot more clear, especially to students in our program. With that being said, tell us a little bit more about really, what type of skills and the type of character traits that takes someone, or better yet, that are essential for someone to pursue a career in finance, especially at the undergraduate level. What are some of those important character traits that they need to pursue a career in finance?
Yeah, so on the skills side, honing in on your technical skills is super important. Like understanding financial statements, understanding company valuations, that stuff really, really matters. Like, you do not want to be the guy who has to sit there and ask his associate to explain unlevered free cash flows to you, or like explain how to calculate WACC. Like, they're going to be extremely annoyed with you at that point. You're wasting their time. So honing in on your technical skills and, being able to be quick on your feet with them. So not even just understanding them, but being quick with them, understanding them to a point where you can put it to practice like that at the snap of a finger. Like, there's going to be times where they say like, hey, put together a comps analysis right now. Like, we have a client call in a couple of hours. We want to at least have a few comparables that we can show them, or just a real quick DCF, something like that. You want to be able to hit those, you want to be able to hit it running really quick, snap of a finger. Another really important thing, and this is something I myself know that I need to work on personally, but writing skills are super duper important. Grammatical errors, those are the most of the comment turning you're going to get are probably going to be grammatical errors. And I mean, there's going to be times where like you have an associate who thinks it should be written one way and another associate who tells you it should be written this way. And, there's a little bit of back and forth on that kind of stuff. But overall, good grammar, good writing, persuasive writing is extremely important in investment banking because most of what you're doing is going to third party investors and saying like, hey, this is why you should invest, this is why you should be a part of this deal. So you have to kind of be a salesman. You had that, they call it the sell side for a reason. You have to be very good with your persuasive writing, which is super important. And then last skill I'd really talk on is the industry knowledge, understanding economics, understanding like how the inner workings of different things work. I really think the textbook for the analyst prep program is huge with this. Understanding corporate defense mechanisms like poison pills, understanding different corporate actions like buybacks, tender offers. These things are very important, not even so much because you're going to be working with them all the time, but because when you look at like term sheets and different engagement letters, like you want to be able to understand what is on it. And so like, to understand what's on it, you have to understand the definitions of a lot of these things. So that industry knowledge is super important. If we're talking character traits, you have to be an extremely motivated person. You have to be motivated and very determined. And this kind of goes into the conversation that we were just having about being there late some nights. Like you can't let that bother you. You have to be almost excited for it, like jacked up about it. You can't be like bummed out if you get staffed on another project. You should be jacked up, like hell yeah, let's do it. Another deal. I want to be a part of it. So you really have to have that motivation, that determination, and I also think a layer of thick skin is pretty important as well. You're gonna get like I said, the comment turning. Sometimes comments seem almost like passive aggressive, almost like towards you. But you got to have thick skin and just learn from it. And same thing with clients. Some clients might not be the easiest to work with. So practicing patience, having that thick skin, and being having that fiduciary duty to your client to like be there for them constantly and work with them, even if you don't agree with them, even if they're kind of got you going in circles a little bit. That's all very important stuff. And then I'd say being creative is super important as well. Every deal is different. No deal is exactly the same. So you're going to have to get creative with some deals. And I guess one other thing, and this is something that I take personally, but I think you should be fueled by the disadvantages. You gotta be happy to be an underdog sometimes. Especially myself, I didn't come from a target school. I didn't have any relevant internships going in, and so I kind of had this confidence but not cocky attitude. You got to be confident, and you also have to be humble. Know that you don't know everything. I forget who said it, but I love that saying. The only thing I know for sure is I know nothing. So you got to go in confident, but not cocky, and be happy to be the underdog.
Wow. There's a lot of good points that you made in that response. Let me see if we can unpack that a little bit, because you did mention a lot of good things there. I think the first one, understanding the terminologies and how to calculate a lot of the analysis that you're doing. And like the reason why it's important is because what if you get stuck working yourself with the client individually, and you have to explain to the client how we're valuing your company? How does the discounted cash flow analysis work? Or let me explain to you how we calculated WACC, which is your average cost of weighted capital. You need to understand that in the event that you have to explain that to the client because the managing director is not available or no one else on the team is available. So the level of responsibility for you as the junior analyst on the team to understand these things is because someday you're going to have to explain it to the client. So there is no other way around it. You have to understand the material. So I think that's a really good point. The second one was, difference of opinion. If an associate or a VP on the team disagrees with you on how you're phrasing a specific sentence or a message or showcasing graphs on the slide, it's really about what's the easiest or simplest way to convey this message to the client on that slide. So I definitely understand that, because that happened to me when I was an analyst in my junior days. The third point, that I will summarize was take initiative, right? Taking initiative to learn the material, kind of taking an approach of doing things because you're genuinely care and you're genuinely trying to master your craft as a professional analyst. You kind of have to be very self-motivated to learn this material. And the reason why you're doing it is because, look, you got to think longer term here. Analyst level is 1 to 3 years. And you can learn so much in those 2 to 3 years that it will be the foundation for you to do other things in your future 5, 10, 15 years after that. And I'm a prime example of it myself. And that it's a segue to my final point, which was you need thick skin to work with clients. You guys are on the sell side. I myself now, as an entrepreneur, as a business owner, being on the buy side also with my own fund, I'm basically the client. And whether I'm dealing with my tech team, where I'm dealing with a human resource, or headhunters, talking to them about what my needs are as a client and what are my deadlines, I understand may not be perhaps the easiest way to go about it, because I have very tight deadlines, because obviously I'm running an operation here and I am an entrepreneur as well. So when someone else wins my business, there is a high level of expectation and standards that I have. And I understand that dealing directly with the lead person, they're going to feel that pressure, and that pressure is going to come down to the last person on the team being the junior level person. So I've been there and I totally understand it. So having thick skin is very, very important when you're dealing with a very demanding client. So I totally understand that. So with that being said, what advice would you have for Romero mentoring students that are currently going through the Analyst Prep Program, or even maybe for a YouTube audience that is starting to learn more about Romero mentoring and are considering a career in finance? What advice would you have for them?
Yeah, I mean, if we're, looking at the Romero mentoring group, I know most of the students are normally in their younger years of college, freshmen, sophomores. One thing I would say to you guys is, it's never too early to start recruiting and building your network. That's super, super important, and again, that's half the value that investment bankers bring to the table is their network, the people that they know, the third-party investors that they can connect their clients with.
Yeah.
And just overall for yourself, you never want to burn a bridge. You never know what kind of opportunities can come from each connection that you have with somebody. And by the way, a connection is not like just following someone on LinkedIn. A connection is, following someone on LinkedIn with a note, reaching out, having genuine curiosity into, their career paths and, any steps that they took down their journey, because you genuinely want to learn more. Another really big piece of advice I think is super important is, especially at the collegiate level, is to read. Reading is just like you've learned so much from reading. It's absolutely ridiculous. And, there's this huge gap between academia and the real world. And if you come out of school and the only thing that you took away was specifically what it tells you in the textbooks, you're not going to be all that prepared for the real world, because the real world doesn't follow those textbooks. The real world has its own set of rules. And so what's really great about reading is you get to see the perspectives of tons of different authors and what they've gone through. And, there's a whole bunch of books that I'd love to recommend. I know Louise has a ton of books that on the website to read, and a lot of them are, dissenting opinions from the things that you'll read in textbooks at school. But it's super important to cast a wide net with your knowledge and keep reading, really just keep reading. Another thing that I think is really important, and, I know I just recently wrote an article about this for Romero Mentoring, But as a college student, whether you're interested in investment banking or an analyst, like an equity research position, really pretty much anything dealing in the securities business, I would suggest taking your securities industries essentials exam, because it's really not very demanding. If you're interested in this space, you're probably either majoring or minoring in finance, so a lot of it is going to be pretty familiar to you. And that way you don't have to deal with studying for that exam while you're on the job.
Mhm.
Because I know myself, even those first couple of weeks when things were kind of slow, I was still staying at the office till like 8 o'clock at night because I was studying for these exams that I had to take. And then the other great thing about it is you don't have to be sponsored by a FINRA organization to take the SIE. And so, you take that in school and you're walking into an extremely crowded field. There's a lot of applications out there, a lot of resumes flying around. And so, on your resume, saying that you already have this FINRA exam under your belt and it doesn't expire for 4 years. So, that gives you a ton of time to find a job. Um, Saying that you already have that under your belt, it saves the company money because they would probably have purchased some kind of study program for you and they would have bought in the exam for you. I think it's like $60. So it saves them money, it saves them time, saves you time,
Yeah.
and you stand out. It shows that you care enough about this space to have looked into the first step and gotten it done, checked it off the list.
Yeah, no, that's really good advice. The SIE exam. We'll put the link down in the description for those of you that are interested. Just go ahead and check out his article. I think it's a really good, informative article on the SIE exam. In terms of your point of what you mentioned about the gap between academia and the professional world, I think what tends to happen in the professional world is that we're practitioners where we are making decisions real time because of the information that we're receiving. Whereas in academia, a lot of the textbooks that you have, but also a lot of the infrastructure that has been put in place has been, theories, concepts that we do apply in the professional world, like the Black-Scholes model, a discounted cash flow analysis. I mean, a lot of this stuff was put in place by Nobel Prize winners, but many of it has probably been a little bit outdated. But in real time, we are making real time decisions, and sometimes academia is a little bit slower to catch up. But you're a prime example of that yourself, being now a first year investment banking analyst, where now you're becoming a practitioner. And there's really no shortcuts, right? And the more you do it, the better you're going to become, the better judgment that you'll have. And like I tell many of our students in our program, like, listen, you guys need to go through multiple economic cycles in order to really understand what happens in the equities market. I mean, another example is what we just experienced after COVID, right? Tech was the best performing sector, right? A lot of people got into the growth stocks. Now we're in an economic environment where we have high inflation, we have high interest rates, and many of the top performing tech stocks in 2020 and 2021 are now the worst performing stocks. So you have to go through multiple cycles like that in order to really understand what happens in the economy and where capital flows into and flows out from. And as a professional, if you're on the sales side, as an investment banker, what type of recommendations would you have for your clients that are struggling during a downward market cycle and so forth? So I think those are really good points that you mentioned and good advice. Any last words before we wrapped up our alumni chat series?
Yeah, I mean, just something that I know you talk about a lot in the program, and it's great for me to finally be in a position where I can start to see it real time. But it's got to be something you love. You can't get into this space because you saw some CFI article talking about the starting salaries. The starting salaries, it's not going to be worth it if you don't love it. So you gotta love it, and you gotta have that kind of that underdog attitude. When the going gets tough, the tough get going. That's just how it is in this space.
Mm-hmm.
So, and I also just want to say, like, even with that out there, I don't think you should be afraid to go for it if your curiosity is striking you over this space. If you do what's easy, your life long run will be hard. If you do
Mm-hmm.
what's hard, long run, your life is going to be much easier. You'll learn more, You'll be, more satisfied with your own accomplishments. And this space is just a great way to do that because, like you mentioned, you learn so much those first couple of years that you can kind of take it and the moon's the limit. You can bring that, what you learn in investment banking, you can bring into almost any industry, any job. So it's all just really applicable skills, and it's definitely worth it.
Great points all around. And again, thank you for taking the time out to be part of our Alumni Chat Series and sharing your story, and just a lot of great valuable points that I hope our audience is listening to. Make sure you guys are taking notes on this, because there's a lot of great information unpacked in this series, in this chat with Drake. Drake, again, thank you. And for those that are watching, if you want to learn more about our Analyst Prep Program, go to romeromentoring.com. Take a look at all of the programs that we have there available for you if you want to break into finance, or if you just want to learn more about being an analyst, investing, the stock market. We have other great programs for you out there. Nice talking to you, Drake. With that being said, I'll see you guys in the next one. Take care.